As we wrap up the month of November, the Dow and S&P 500 has hit another all-time high. Joining me this afternoon to weigh in on OPEC as well as the latest market action is Matthew Cheslock of Virtu Financial. Matt, thanks for joining me today.
It's my pleasure. Thanks for having me.
Well, we did get the OPEC deal, but that we had been expecting or not expecting, depending on who you ask, and we're seeing crude oil futures rally. So what do you make of the terms of that deal?
Well, you know what? I think it caught the shorts by surprise. You know, yesterday we saw the big move lower, almost 5% lower, on the fact that they wouldn't get a deal done. But the fact, if they could not get a deal done, it would have pretty much ensured that there would have been no credibility in the OPEC at all going forward. So they had to get some kind of deal done. It was surprising that they got it done, surprising in the terms. And you're seeing crude, it's really a short covering rally, running up to the resistance level here, probably at $48 to $50, probably as anticipated. And now we'll see if they can break through that price point.
And of course, we can't forget the fact that November was an election month. And of course, here on the trading floor, we've seen the major equity averages rally and hit new all-time highs. Now, so far, the Trump administration has announced two economic positions to the administration, including Mnuchin as well as Ross. So what do you think that means for the fiscal policy as well as what that means for Wall Street?
Well, you know, it's good for corporations. You know, it's good for the U.S. You know, we talk about repatriating a lot of money back at a lower tax rate. We talk about lower corporate taxes. That's good for the economy as a whole. I think it's good for the markets, obviously. You know, we've seen the markets rally substantially on this type of news. You know, one thing that we've seen is that individual sectors have rallied us to this price point. In the market. And that's what's been so great about this rally is that we haven't lost steam on the back end of it. So as one sector rallies, the other sectors aren't selling off. They're just not being bought. Today's oil taking us higher. And that was a sector that really had missed most of this rally. So, you know, I've never seen a president in my lifetime go under the scrutiny that he is as far as his appointments go. But I think generally most of them have been well received, at least right now. And the market as a whole has received them well. And I think that's the most important part, at least from a trading standpoint.
And Matt, that does bring me to my last and next question. Now, regarding sectors, today we're seeing energy, as you mentioned, as well as the banking sector higher. But given the valuations of different companies, where do you stand and what sectors look promising and which do not?
Well, the financial sector was very interesting because their earnings out for the third quarter were so strong, and they didn't really rally on that news. So that really took a little bit more time, and then we finally got our president-elect in, and we saw the financials roar to highs. So they were definitely the leader, and to see them lead today is not a surprise on the announcement of the Treasury Secretary. You know, financials are probably going to benefit most from that. So that's not a surprise. But, you know, this rally has been much stronger than I anticipated. I probably anticipated a pullback after the initial rally, but it's held. Here's the caveat to that. Today we run up against the end of the month. As we start a new month, maybe many funds may have closed their books for the year. We'll find out how much volume is driven in December and if we're going to get a Santa Claus rally. And that's going to be interesting because the consumer right now is going to be in focus as we get a lot of retail numbers, as we get the Fed speak, as we go to middle December here. So there's a lot of headwinds in front of us here. But right now the market has been more solid than I expected, and it's mostly due to sector rotations and lack of funds that are selling, at least in November.
Okay, Matt, well, thank you so much for joining me at the end of the month, and thanks for your insight as always.
All right, my pleasure.